Communication and utility costs are part of modern life. You need a phone line for emergencies. You need internet access for medical portals, banking, and staying connected with family. You need heat in the winter and cooling in the summer. These are not luxuries, they are necessities. And yet, the monthly bills for these services keep climbing. The good news is that there are targeted programs designed to reduce the burden. The first is a federal initiative called Lifeline. It provides a direct monthly discount on your phone or internet service. The base amount is just over $9, but many states add their own supplemental discount on top of it, pushing the savings higher. It is not a massive windfall, it is a steady reduction. The second program addresses home energy costs. It is called LIHEAP, which stands for the Low Income Home Energy Assistance Program. It helps cover heating and cooling bills, especially during extreme weather seasons. Some states distribute it as a direct payment to your utility company. Others provide it as a voucher you can apply when the bill arrives. Both programs operate on a request basis. Both programs have income guidelines that are broader than people expect. Many retirees assume they make too much to qualify. They do not realize that household size, regional cost of living, and seasonal spikes all factor into the calculation. They assume the paperwork will be overwhelming. They do not realize that local community action agencies handle the intake process for free. The philosophy behind these programs is simple. Essential services should not force people into impossible choices. When you stack Lifeline with LIHEAP, you're not just saving a few dollars. You are creating breathing room. You are removing one more fixed expense from your monthly ledger. You are ensuring that your budget reflects your actual needs instead of inflated market rates. The action step is identical to the others. You ask. You call your state utility commission or your local community action office. You request the application. You submit your documentation. You receive the discount. It takes less than an hour of your time. It lasts for a full year. It renews automatically in many jurisdictions. The system does not advertise it. It does not send you a brochure. It waits for you to step forward. Once you do, the monthly total drops. The stress lightens, the money stays where it belongs. The fifth area is where the pattern repeats, and it is the one that costs people the most over time because it hides inside routine financial habits. We already talked about the additional standard deduction for age. Now we need to talk about how it interacts with your withholding. When you work, taxes are pulled from your paycheck automatically. When you retire, many people keep the same withholding rate out of habit. They let their pension provider or their Social Security administrator continue deducting a higher percentage than necessary. They assume the government will sort it out at tax time. What actually happens is this. You overpay every single month. You wait until spring, you file your return, you receive a refund, you celebrate getting money back. But that refund is not a gift. It is your own money returning to you after sitting with the government for months, earning zero interest. You essentially funded the system for free while tightening your own budget. After sitting with the government for months, earning zero interest, you essentially funded the system for free while tightening your own budget. When you cross 65 and qualify for the extra standard deduction, your actual tax liability drops. Your monthly withholding should drop with it. If it does not, you're repeating the same cycle year after year. The fix requires one deliberate conversation. When your tax return is prepared this year, ask a direct question. Given my age and my current deductions, should my withholding be adjusted to match my actual tax liability? If the answer is yes, request the change. Fill out the updated form. Submit it to your pension administrator. Given my age and my current deductions, should my withholding be adjusted to match my actual tax liability? If the answer is yes, request the change. Fill out the updated form, submit it to your pension administrator or the Social Security Administration. Watch your monthly deposit increase. The change might seem small at first, $20, $30, $50, but over 12 months, that adds up to hundreds of dollars, staying in your account instead of disappearing into a delayed refund. Over 5 years, it adds up to thousands. This is not about avoiding taxes. This is about aligning your payments with your actual legal obligation. It is about stopping the automatic overpayment that has become so normalized that people mistake it for responsibility. True responsibility means paying exactly what is required, no more, no less. The law gives you the tools to do that. You only have to use them. Let us step back for a moment and look at the bigger picture. Why does this gap exist? Why do so many people continue paying bills they are legally exempt from? The answer is not malice, it is momentum. The system is built on continuity. Agencies operate on existing records. They do not scan birth dates to trigger automatic relief. They process what is submitted to them. People operate on habit. They pay what they have always paid. They file what they have always filed. They assume the rules are static, but the rules shift when your life stage changes. The disconnect happens in that quiet space between transition and adjustment. It is not your fault. They assume the rules are static, but the rules shift when your life stage changes. The disconnect happens in that quiet space between transition and adjustment. It is not your fault. It is a design flaw in how information flows. The responsibility to bridge that gap falls on you, not because the system is broken, but because the system is passive. It waits for you to initiate. Once you understand that, the emotional weight lifts. You are not fighting a bureaucracy. You are simply updating your file to match your current reality. I have seen this play out countless times. A retiree sits at a kitchen table, they review their statements, they notice the pattern, they make 3 phone calls, they submit 4 forms, they wait a few weeks, then the numbers shift, the Medicare premium stops being deducted, the property tax bill drops, the monthly withholding increases, the utility discount applies, the tax deduction reflects correctly. Nothing about their life changes. They do not move. They do not sell. They do not downsize. They simply stop overpaying. The money that was leaving quietly starts staying. The budget breathes. The anxiety fades. The retirement finally feels like retirement. That is the entire point. You earned the right to this relief. You paid into the system for decades. You followed the rules. The rules now work in your favor. You just have to activate them. There are a few advanced strategies that apply to people who own homes with significant equity or who have experienced major life changes. These are not for everyone, but they are worth knowing. The first is a property tax deferral program. Several states allow seniors to pause their property tax payments entirely. The state covers the bill in the meantime. The amount is recorded as a lien against the property. It is settled later when the home is sold or transferred to heirs. This does not erase the debt. It delays it. It preserves your monthly cash flow. It allows you to stay in your home without draining your savings on rising taxes. The second strategy involves surviving spouses. When one partner passes away, the senior exemptions and assessment freezes do not always transfer automatically. In many jurisdictions, the surviving spouse loses the protection unless they file the correct paperwork within a specific window. This is a painful oversight. The tax bill jumps at the exact moment the household loses an income. Filing the carryover form preserves the frozen rate. It honors the original agreement. It keeps the surviving spouse from facing a sudden financial shock during grief. The third strategy is often overlooked because it seems too small to matter. Vehicle registration and excise taxes. Many states reduce or waive these fees once you reach a certain age. The savings might be $30 a year, or $50 or $75. Individually, it feels minor, but when you stack it with everything else, it becomes part of a larger pattern. Every dollar you stop overpaying is a dollar you keep. Every form you file is a boundary you set. Every program you claim is a statement that you will not silently fund what the law says you should not have to pay. These advanced moves are not mandatory. They are optional shields. Use them if they fit your situation. Skip them if they do not. The core 5 areas remain the foundation. The rest are layers you add when the timing is right. If you're wondering where to start, here is the exact sequence. First, contact your county tax office. Ask about your homestead exemption, your senior exemption, and your assessment freeze status. Request the forms if any are missing. Submit them before the deadline. Second, call your local SHIP office. Ask to be screened for the Medicare Savings Program. Ask about the prescription drug subsidy. Complete the application they provide. Third, review your tax withholding. Speak with your preparer or your pension administrator. Adjust your monthly deduction to match your actual liability. Confirm that both your standard deduction and your age-based addition are applied correctly. Fourth, apply for Lifeline and LIHEAP through your state utility or community action office. Submit the documentation, activate the discounts. Fifth, verify your annual tax return reflects every age-based deduction available to you. Ask about withholding adjustments. Keep copies of everything. Track the dates. Follow up if approvals are delayed. None of these steps require you to pay a professional. Free tax preparation services exist specifically for older adults. Programs like tax counseling for the elderly and AARP tax aid staff, certified volunteers who know exactly which deductions apply to seniors. They will sit with you. They will review your documents. They will file your return at no cost. You do not need to spend money to claim what belongs to you. You only need to invest a few hours of your time. The return on that investment is immediate and lasting. Let me leave you with this. Financial peace in retirement is not about making more money. It is about keeping what you already have. It is about recognizing when the rules have shifted in your favor and stepping into that space without hesitation. It is about replacing silent overpayment with intentional claiming. You do not need permission. You do not need special connections. You do not need to be an expert. You only need to know where to look, what to ask, and how to submit the request. The system is waiting for you to initiate. Once you do, the numbers change. The pressure lifts. The money stays. You finally get to enjoy the season of life you worked so hard to reach. If any part of this resonated with you, please take a moment to share it with someone who needs to hear it. Your voice matters. Your experience matters. And your decision to stop overpaying in silence matters more than you realize. Thank you for your time, your attention, and your commitment to protecting what you have built. I will see you in the next one. What if the money leaving your bank account every month was never supposed to leave at all? What if the system quietly shifted in your favor the moment you turned 65, but never handed you the key to unlock it? If you are ready to finally keep what you have already earned, please take one quick second to tap the like button. Subscribe to this channel and share this with one person who needs to hear it today. Your support keeps these conversations alive, and it ensures more people stop overpaying in silence. You have spent decades showing up. You paid into the system. You followed the rules. You worked long hours, raised families, managed emergencies, and planned for a retirement that was supposed to feel like a reward instead of another round of budgeting. Yet somewhere along the line, a quiet pattern emerged. The bills kept arriving. The deductions kept shrinking your checks. The notices kept piling up. And nobody ever sat you down to explain that crossing the age threshold actually changes the rules of the game. The truth is simple, but it is rarely spoken out loud. Once you reach 65, you step into a different financial lane. The law recognizes that your earning years have shifted. The government adjusts certain obligations. States, counties, and federal agencies all have provisions designed to ease the burden. The problem is not that these programs do not exist. The problem is that they operate on a request-only system. No agency will call you on your birthday to announce your new status. No county will automatically freeze your property taxes. No tax preparer will magically adjust your withholding without a direct prompt. No tax preparer will magically adjust your withholding without a direct prompt. The gap between qualifying and receiving is where millions of dollars vanish every single year. It vanishes in plain sight, hidden inside routine payments that people make out of habit rather than necessity. You're not being scammed. You're not being targeted. You're simply caught in a system that assumes you already know what to ask for. And when you do not ask, the system assumes you are fine with paying the full amount. That assumption costs retirees thousands of dollars over time. It drains savings. It forces difficult choices. It turns what should be a peaceful season of life into a quiet financial squeeze. The good news is that this squeeze is completely reversible. It does not require legal battles. It does not require complicated paperwork. It does not require you to change your lifestyle or move to a cheaper state. It only requires you to understand what is available, recognize which pieces apply to your situation, and take the exact steps needed to claim them. I've spent years studying how these programs work, where they overlap, and why so many people miss them. It only requires you to understand what is available, recognize which pieces apply to your situation, and take the exact steps needed to claim them. I've spent years studying how these programs work, where they overlap, and why so many people miss them. The pattern is always the same. People hear the word exemption and immediately assume it only applies to those with very low incomes. Others hear the word relief and assume it is reserved for the wealthy who can afford specialized advisors. Both assumptions are wrong. The reality sits right in the middle. Some programs are designed specifically to protect modest budgets. Others are structured to preserve wealth that has grown over decades. A few quietly influence the broader economy in ways that even renters feel. None of them require you to be in a certain tax bracket to benefit. None of them require you to be in a certain tax bracket to benefit. They only require you to meet the age threshold and file the correct request. That is the entire secret. The system does not hand it to you. You have to step forward and claim it. Once you do, the math changes instantly. The pressure lifts. The money that was leaving quietly starts staying where it belongs. Let us begin with the first area where the shift happens. And it is the one most people overlook because it hides inside their annual tax return. Every year, you file your taxes, you look at your standard deduction, you sign the paperwork, you move on. What you might not realize is that the tax code builds in a specific advantage for older filers, and that advantage has recently expanded. When you turn 65, you qualify for an additional standard deduction on top of what everyone else receives. This is not a temporary credit. It is not a limited time promotion. It is a permanent feature of the law, and it stacks directly with your baseline deduction. If you're married and both of you have crossed that age line, the benefit doubles. The numbers shift depending on your filing status, but the principle remains exactly the same. The government reduces the amount of your income that can be taxed simply because of your age. This means less of your money is pulled into the federal system. It means more stays in your hands. The catch is that this only works if your return actually reflects it. Many people file their taxes the same way they did at 55. They hand over their documents to a busy preparer who runs through the standard lines without pausing to adjust for age. They hand over their documents to a busy preparer who runs through the standard lines without pausing to adjust for age. Software does the same thing unless your date of birth is entered correctly and the senior option is manually verified. When that step is skipped, you overpay. You might get a small refund, but it is still a refund that is smaller than it should be. You are essentially handing the government an interest-free loan every single year. The fix takes minutes. Before you sign any tax document, ask one direct question. Did you apply the additional standard deduction for age 65 or older? If the answer is no, or if the preparer seems unsure, pause the process. Request that it be added. If you are using digital software, check your profile settings. Confirm your birth year is accurate, and watch the deduction line update in real time. That single adjustment can shift your taxable income by thousands of dollars. For people living on fixed incomes, that shift is the difference between stretching a budget and breathing comfortably. It is not about gaming the rules. It is about using the rules exactly as they were written for your life stage. The system expects you to claim it. It does not expect you to guess. The second area is where the largest savings usually live, and it involves the place you call home. Property taxes are billed annually, but they are calculated based on your home's assessed value, and that value rarely stays still. Neighborhoods change, markets shift, renovations spread. Over time, your tax bill climbs even if your income does not. This is where age-based property relief steps in, and it usually comes in 3 layers. The first layer is the basic Homestead Exemption. It removes a set portion of your home's value from the tax calculation before the county ever runs the numbers. The amount varies by state, but the effect is universal. Your taxable base shrinks, your bill drops. The second layer activates the year you turn 65. It is often called the senior exemption, and it sits directly on top of the homestead. In many places, it removes another chunk of value from the calculation. Some states tie it to income. Many do not. Age alone is the trigger. The third layer is the most powerful of all. It is the assessment freeze. When you apply for it, the county locks your taxable value at the current level. From that day forward, even if your street becomes highly desirable and home prices surge, your tax bill stays calculated on the frozen number. Your home can appreciate dramatically. Your payment does not have to. This protection is designed exactly for people who have stayed in their homes for decades. It honors your stability. It shields your budget from market volatility. The problem is that none of these layers activate automatically. You must request them. You must file the correct form with your county assessor. You must meet the deadline. If you miss it, you pay the full amount for that year. If you skip the freeze, your bill will keep climbing with every reassessment. Renters often assume this section does not matter to them, but that is a misunderstanding. Landlords pay property taxes. When those taxes rise, landlords raise rents. When property tax relief spreads through a community, the upward pressure on housing costs slows down. The entire local economy feels the difference. If you own your home, this is your strongest financial shield. Renters often assume this section does not matter to them, but that is a misunderstanding. Landlords pay property taxes. When those taxes rise, landlords raise rents. When property tax relief spreads through a community, the upward pressure on housing costs slows down. The entire local economy feels the difference. If you own your home, this is your strongest financial shield. If you rent, it is a quiet stabilizer that keeps your monthly costs from spiraling. The action step is straightforward. Contact your county tax office. Ask specifically whether your homestead exemption, senior exemption, and assessment freeze are currently on file. If any are missing, request the exact form needed to add them. Ask for the submission deadline. Write it down. Set a reminder. File it once, and in most jurisdictions, it stays active as long as you own the property. That single conversation can save you hundreds or even thousands of dollars every single year. It is not a complicated process. It is a deliberate one, and it belongs to you by law. The third area touches your health coverage, and it is the one that drains money so quietly that most people forget they are even paying it. Medicare. Part B is the medical insurance portion of the program. The premium is deducted automatically from your Social Security check before the funds ever reach your bank account. In recent years, that amount has climbed past $170 per month. It feels small in isolation. It feels invisible because it never shows up as a manual payment. But over 12 months, it adds up to more than $2,000. That is money that disappears before you even see it. What most retirees do not know is that there is a safety net designed to cover this exact cost. It is called the Medicare Savings Program. It is administered by your state. It is funded to help people with modest incomes keep their health care affordable. There are different tiers within the program, but the core function is the same. If your income falls within the approved range, your state will pay your Part B premium for you. Some tiers go further. They cover deductibles. They reduce copayments. They remove the financial friction that makes people skip doctor visits or delay necessary care. The income thresholds are higher than most people assume. Many retirees glance at their monthly deposit, decide they earn too much, and never apply. They do not realize that the calculation includes specific deductions. They do not realize that several states no longer count certain assets, like a primary residence or a modest savings account. They assume they are disqualified before they even check. The result is a quiet overpayment that lasts for years. The fix is one phone call. You do not need a lawyer. You do not need a financial advisor. You need your local state health insurance assistance program office. The acronym is SHIP. These offices are free. They are staffed by trained counselors. Their entire purpose is to screen you for programs you qualify for and help you complete the paperwork. You call them. You share your basic income details. They tell you exactly which tier applies to you. They guide you through the application. In many cases, approval takes a few weeks. Once it is active, your Part B premium stops being deducted from your check. The money stays with you. The math is undeniable. Over a single year, you keep more than $2,000. Over 5 years, that is more than $10,000. That is not pocket change. That is a financial cushion. That is the difference between worrying about a sudden repair and handling it without panic. And while you are on the phone with SHIP, ask one follow-up question. Ask about the prescription drug subsidy program. It is often called Extra Help. It targets Medicare Part D costs. It lowers your monthly drug plan premium. It reduces your deductible. It caps your out-of-pocket expenses for medications. For people managing multiple prescriptions, this program can be life-changing. In many states, qualifying for a Medicare savings program automatically enrolls you in Extra Help. 2 major health cost breaks. 1 conversation, 1 set of forms. The barrier is not complexity. The barrier is awareness. Once you know it exists, you simply reach out and claim it. Before we move forward, I want to pause for just a moment. If you have stayed with me this long, it means you are serious about protecting what you have built. That kind of intention matters. If you want more straightforward breakdowns like this, please hit the subscribe button right now, tap the notification bell, and share this video with a friend or family member who deserves to keep more of their hard-earned money. Your engagement tells the algorithm that this information matters, and it ensures we can keep bringing you clear, actionable guidance without the fluff. Thank you for being part of this community. The 4th area is smaller in dollar amount, but it is still a recurring charge that the system has already decided you should not have to carry alone.